Straight to business news for you now on the programme, starting with a big day for trade in the US. Now, this is as Donald Trump gets set to sign America's ratification of the new USMCA trade deal. It's not all wrapped up yet, is it? Brian Quinn is here to tell us.
It is not indeed, Stuart. Trump is, however, planning a big ceremony at the White House for the USMCA. Some 400 guests are on the list not invited, some key Democrats who helped to get that bill passed. Well, the USMCA, of course, replaces 1994's NAFTA deal, frequent target of criticism by Trump. Changes in the new deal include the requirement of higher wages for some Mexican auto workers and a new dispute settlement for investors. Despite a triumphant tone from Trump on the deal, it is not done yet. Canada has yet to ratify it and could take months to do so, as Monty Francis reports.
In an order reflected in its very name, Canada is last in line to ratify the new United States-Mexico-Canada agreement, which updates the 25-year-old deal known as NAFTA. The deal can't take effect until 90 days after the last party signs, and Deputy Prime Minister Chrystia Freeland, who led Canada's negotiating team, is urging her country's parliament to approve the deal without undue delay. U.S. President Donald Trump, who made replacing NAFTA a key campaign promise, is now facing a re-election bid and is eager to celebrate the accomplishment.
We will replace the NAFTA nightmare, one of the worst trade deals ever in history, with the incredible brand new U.S.-Mexico-Canada agreement, the USMCA.
There is little doubt that Canada will approve the USMCA, but members of Canada's main opposition Conservative Party say they have reservations. One Conservative lawmaker tweeting, "The Libs do not yet seem to realize the realities of the new minority parliament and are mistaken if they believe that we will rubber stamp the deal." Citing concerns about the impact on Canada's forestry and aluminum industries, lawmakers could slow down the ratifying process by calling witnesses. There is also fierce opposition from the Bloc Québécois, which says the deal would harm Quebec's dairy industry. Facing what's promised to be a thorough debate and review, some political observers say ratifying the deal could take months.
Well, let's check in on the markets now. European indexes still struggling to rebound after the worst sell-off in 3 months over coronavirus fears. London's FTSE 100 and the CAC 40 here in Paris on either side of the flat line at the open. The Frankfurt DAX down 0.1%. Asian indexes also a mixed picture on Wednesday. The Nikkei in Tokyo and the Kospi in Seoul bouncing back modestly. The Kospi lost over 3% yesterday. Mainland China markets remain closed. Hong Kong Stock Exchange reopened after the Lunar New Year holiday. It's taking a big hit today with the Hang Seng down over 2.75%. Earlier, France 24 spoke to markets analyst Han Tan about just how long the effects of the virus might be felt on the markets.
I think this is a risk that investors will have to contend with maybe for a few more months. If we use the 2003 SARS outbreak as a guide, that was a 6-month event. So we have seen market sentiment being hit, certainly. Next, we want to see the economic data, and we have the China Pmi Figures scheduled to be out either later this week if it's not delayed. If there's a marked slowdown in the non-manufacturing sector, the services sector, then that could trigger another bout of risk aversion.
Well, next, Apple is reporting record profits for the most recent quarter. The tech giant says revenues were up 9% to hit nearly $92 billion for the 3 months ending December 28th. Net profit up 11% to $22 billion, with earnings per share rising a full 19%. Those results smashing expectations, sending share prices up 1.5% in after-hours trade. The growth driven especially by strong iPhone sales to the tune of $56 billion worth. Apple says it expects revenues to rise another 9 to 15% for the current quarter. And finally, for business, an unlikely venue for the enforcement of sanctions on North Korea. A German court ruled Tuesday that a youth hostel located on the grounds of the North Korean embassy in Berlin must shut down. Sam Bradpiece has the story.
Fueling the flames of North Korean geopolitical aggression, a hostel in Berlin. A German court ruled to close this establishment as its operation breaches UN sanctions and an EU directive aimed at stopping the flow of hard cash to Pyongyang. The owners of the hostel offered beds for less than €13 a night and leased the premises from the North Korean embassy for an estimated €38,000 a month.
It is not a question of the Federal Republic saying that North Korea must not have an embassy here, but rather of refraining from anything that could acquire funds here via third parties and thus allow funds to flow directly or indirectly to North Korea.
The North Korean embassy was closed after the fall of the Berlin Wall but reopened in 2001. Officials made money on the side by subletting rooms and parking spaces. The UN has piled increasingly heavy economic sanctions on North Korea since 2006 in response to the regime's nuclear testing. The closing of this hostel sees another revenue stream disappear.
Well, it sounds like it was a heck of a deal, Stuart, but probably not one that I would have been likely to take advantage of as an American.
No, perhaps not. Very, very strange story. Thank you very much, Brian Quinn, with the Business on France 24.